Hello everyone, this is My Stocks For You, and thank you for watching my video. Today I'm going to be going over the 5 steps leading up to the buy. And before I do that, I want to talk about this website, freestockcharts.com, and I want to show you how I set up everything. So first off, all you have to do is go on freestockcharts.com, create your account. Everything I use is completely free, and they don't send you any junk mail, so you just sign up, and then the default settings are slightly different. So then I go to settings, I click log, plot style, I use the candlestick, and then I add my indicators, the 20, 50, and 200 day moving average. And I do that simply by clicking add indicator. I go to moving average, I add it to the price history, and you just edit it to whatever you want. Next, I will add the volume. You click add indicator, you click volume, and the default settings has it at the 50-day moving average, or 50-day volume average. That's what the white line is. And next I will add the stochastics. And again, I go to add indicator, click stochastics, and then you can edit it. I use the 1433, and if you're anything like me and you want to understand what you're using and what this means and how the stochastics is calculated, I would suggest going on Wikipedia and just looking it up. I believe they provide a great explanation as to how it's calculated and its uses and so on and so forth. But it's pretty easy to understand, but they'll probably be able to explain it in a much better manner than I will. So that's it. That's how I set up everything. So let's break into the 5 different steps. The first step is establishing your downward channel, like this one. Second step is waiting for the stochastics to go oversold. And by oversold, I mean it goes below the red line. So it's considered oversold when it goes below the red line, which is 20. So you can see right here on March 8th, 2013, it went to an oversold level of 14.52. So it's considered oversold. And number 3, the third part, is you look for additional lines of support. The fourth part is looking for bullish tendencies. And the fifth part, and probably the most important part, the overall market conditions. So the first part is establishing your channel. I've talked in previous videos how to locate stocks, good quality stocks, how to try to locate the pattern, and you basically have to gain the eye to be able to recognize it. And once you are able to recognize the pattern, I basically go to freestockcharts.com, type in the chart symbol, and then I try to locate the channel that I think is there. And I do that by initially plotting out one line. I plot out one line on the weekly chart where I think the channel is, the pattern is, and once I do that, I break down into the daily and try to just confirm the location at where I drew it and see whether or not I actually like where I drew it. And it looks pretty good to me. And after you've confirmed it, I just go click on the line, create parallel line, and then you move it to your line of support right there, which looks pretty good. And you can see this channel works out pretty well. The stock stays within this confined area, bounces back and forth off of the line of support and the line of resistance, and that's it. That's probably the most difficult part leading up to the buy. That's locating the stock, establishing the pattern, and once you have that done, it's just a waiting game. You wait to see whether or not the stock actually goes to an oversold level, or wait to see what happens. So we've established our channel. Next, you wait for it to go oversold, which we talked about earlier. It does go oversold, and once it does, let's show you real fast. I click here on this tool, the rectangle, and I just highlight the area where it's below the red line. And that's it. That's where it's oversold on the weekly chart. Now we want the weekly and daily to be oversold, and what this does, it's very useful, is it actually shows where the daily and weekly are both oversold. So when the daily chart, the daily stochastics goes to an oversold level and is in the highlighted area, they're both oversold. And that's exactly what you're looking for. They're both oversold. The stock is at the support line, and that is just offering a great buy opportunity. And I said earlier, what would be even better is if the hourly stochastics are oversold at the same time as the daily and weekly. Excuse me. And as you can see right here, it is. The daily, weekly, and hourly are all oversold at the same time. It gives you the exact time frame as to when you should buy. And if you had bought in, you would have bought it at the perfect location, right at its low, and you would have been in the positive pretty much the entire time. So that's the second part. You look for the oversold stochastics in the weekly, daily, and hopefully the hourly. The third part is you look for additional lines of support, and that's what I use the moving averages for mostly. Usually the 200-day moving average is what comes into play with this kind of trading, buying off of downward channels. And as you can see right here, the 200-day moving average is right below the stock price, and this acts as an additional line of support. It just helps reassure you that where you're buying at the location at which you're buying is where you need to buy. It's just you're going to have all the support, not only the support line in the channel, but the 200-day moving average will act as support as well. And I don't necessarily need to have this when I buy a stock, but it's nice to have it. It just makes you feel better. And but like I said, I don't have to have it. A lot of the times, it actually isn't there. But it just adds additional support. So that's the third aspect, the third part, additional lines of support. The fourth part are bullish tendencies or positive signs within the chart. You look for reversals, overtaking candlesticks, things of that nature. Something, as you can tell, I'm not really going into detail about this. It's because I don't use it that often. If there's one candlestick or sign that I use a lot, it's the reversal, and it's basically when a stock, kind of like this one right here, it pulls back really far and it pulls right back up where it kind of opened, and that's what a reversal is. I would suggest going online, looking it up, and if you're really into this idea of looking for bullish candlesticks or bullish signs, then I would suggest going online, looking it up, and you'll be able to find much more information about bullish signs. But it is something that I use occasionally, like I said, reversals, but it's not necessary for me to have it when buying into a stock. So that's the fourth step. And the last one, the overall market conditions. And what I do on the website is I do provide information for when I believe the market is going to go into a correction or the overall market is going to go into a downtrend. And during this time frame, the likelihood of buying a successful stock decreases tremendously. You might have this set up right here, and it might offer a perfect buy opportunity. You have this nice support. The weekly, daily, and hourly are all oversold. But if the market is in, turmoil, it's volatile, it's just in a bad condition or state, it might just continue to break down. It might not break off. It might not reach, bounce off the line of support. And the likelihood of it just continuing to break down or not being successful increases. And so really, I kind of stay out of the market when this occurs. And like I said, I provide this information on my website when it's going to break down or when it's going to break out of a correction. And I look at the S&P 500 on the chart, and I really look for accumulation or distribution, buying or selling. And that's the number one indicator that I like to use. So those are the 5 parts leading up to your buy. You have the established channel, you have the oversold stochastics in the weekly, daily, and hopefully the hourly when it's at the support line, and you also have additional lines of support, bullish tendencies, and last and probably the most important, the overall market conditions. And as you can see, this buy worked out pretty well. If for a swing trader you would have made a nice gain, for long term you made a great gain. And that's about it. I hope you liked my video. Please make comments, ask questions, and I will see you soon. Bye.